It's the close of trade on Wednesday, and once again IREN stock has delivered another strong session. The stock finished at $33.63, gaining more than $3 on the day after hitting an intraday high just shy of $34. For anyone who has been watching this stock over the past few weeks, the momentum feels like it's building day by day, and what we're seeing unfold is not just a rally in share price but the continued confirmation of a powerful thesis that has been outlined by Eric Jackson and other bullish investors. Tonight, I want to break down the latest numbers, revisit some of the points from the first video I put out earlier this week, and then build on them by looking at what changed today and why the story is gathering even more strength. Let's start with the price action, because numbers speak loudly. Yesterday we were talking about the stock consolidating around $30 after a strong push higher. That in itself felt like a meaningful breakout, especially considering the climb from under $6 just a year ago. Now, less than 24 hours later, the market has validated that move with an even sharper advance, closing well above 33. This is not a random fluctuation or a meme-style pop. The volume backing these moves is consistently high, with more than 43 million shares traded today. That tells us institutional buyers are in the market, supporting and driving the trend higher. When we see accumulation at this scale, it's usually the beginning of something bigger rather than the end of a move. The fundamental drivers behind this stock continue to strengthen. In its most recent quarter, IREN produced a record revenue figure of $187 million, representing a year-over-year increase of 228%. Just as importantly, the company flipped from a loss of 27 cents per share a year ago to a profit of 70 cents per share today. That is an extraordinary turnaround in such a short period of time. And when a company goes from bleeding red ink to delivering strong profits while growing its top line by triple digits, it forces analysts, institutions, and retail investors to reevaluate the way they're valuing the business. This is the dynamic that is at play in IREN right now. On the operational side, the mining business continues to be a cash generator. IREN has expanded its Bitcoin mining capacity by 400%, hitting about 50 exahash per second. That scale matters, because it provides consistent revenue at a time when Bitcoin itself is holding relatively steady in the broader market. But what's fascinating is how the company is no longer defined solely as a Bitcoin miner. If that was the entire story, we would likely be talking about a stock with cyclical peaks and troughs depending on the crypto cycle. Instead, IREN is now building a second growth engine that may actually outpace mining in the future, and that is the AI cloud business. Today's update reinforced just how significant this pivot is. IREN has now installed roughly 11,000 Nvidia GPUs, with 9,000 more set to arrive soon. They have also secured preferred partner status with Nvidia, which is something that only a handful of companies can claim. What does that mean? It means they have preferential access to supply at a time when high-end GPUs are one of the most constrained and in-demand resources in the tech world. It also means they are on Nvidia's radar when it comes to connecting with enterprise clients and other AI-driven companies that need compute capacity. The AI cloud division has already started generating about $2.5 million in revenue, and while that is a modest figure compared to the mining side of the business, the profitability is staggering, hardware margins of 98%. Management has guided that they are targeting $200 to $250 million in annualized AI revenue by the end of the year. If they can come close to those numbers, then the investment case changes dramatically, because the multiple the market is willing to pay for a high-margin AI cloud business is very different from the multiple it pays for a Bitcoin miner. Another important piece of news from today is the leadership shift. Anthony Lewis, who had been Chief Capital Officer, has now been promoted to Chief Financial Officer. He brings more than 2 decades of experience from Macquarie Group, where he was deeply involved in energy and infrastructure finance. That background is perfectly aligned with what IREN is building: large-scale renewable power infrastructure, GPU clusters, and long-term financing to fuel growth. Lewis has already been instrumental in securing funding for the GPU build-out, and his elevation to CFO is a clear signal that the company is prioritizing disciplined capital allocation and strategic growth. This kind of leadership change may not grab headlines in the same way as earnings beats or new partnerships, but for institutional investors it matters. It adds credibility to the execution story, and it ensures that as the company scales its AI operations, the financial side is being managed by someone with the right mix of technical and capital markets expertise. If we zoom out, we can see how these developments tie into the bullish thesis laid out by Eric Jackson. Jackson has argued that a sum-of-the-parts valuation of IREN reveals a company that could be worth multiples of its current price. In his most ambitious scenario, he has even suggested a $300 per share target, which would represent roughly a 15-fold increase from where the stock was trading just a couple of months ago. Even his more conservative forecast of $100 per share within 18 months is eye-catching, representing a triple from today's price. And when you line up the facts, the record profitability, the expansion of mining capacity, the massive GPU deployment, the Nvidia preferred partner status, the near 3 gigawatts of secured power capacity across North America, it's not hard to see why he believes the market is still undervaluing IREN. This is not just a Bitcoin miner anymore. It is an emerging AI infrastructure provider with renewable energy at its core. Now, let's touch on the technical picture, because that is also part of why today's move matters. According to IBD's Smart Select ratings, IREN now carries a composite score of 96. That places it ahead of 96% of all other stocks in terms of combined technical and fundamental strength. Its relative strength rating is a perfect 99, indicating that over the past year it has outperformed nearly every other name in the market. And perhaps most tellingly, its accumulation and distribution rating is an A, which reflects sustained buying by institutions. These are not just day traders or short-term speculators pushing the price around. This is long-term capital positioning itself in anticipation of future growth. And that, more than anything, gives me confidence that the rally has legs. Of course, no story is without its caveats. The company's EPS rating is still relatively low, around 37 or 38, because the consistency of earnings growth has yet to be established. That's natural for a company in transition. We can't expect the market to give full credit until IREN proves it can deliver multiple consecutive quarters of profitability and growth. But given the trajectory of mining output, the expected ramp of AI revenue, and the disciplined leadership now in place, it's reasonable to anticipate that consistency will come. For now, the market seems willing to price in the potential, and if the company executes, the ratings will catch up. Another piece of context that has been influencing sentiment is the broader move in AI infrastructure names like Nebius Group. Nebius has been making waves with its own announcements about gigawatt-scale capacity and diversified AI revenue streams. Even though IREN and Nebius are not directly tied, investors tend to see them as part of the same emerging theme: companies that control cheap renewable energy and can channel it into the compute resources that power AI. So when Nebius stock jumps on a new update, it often pulls IREN higher as well, and vice versa. This rising tide effect is real, and it's another reason we've seen IREN trading so strongly this week. So where does this leave us heading into the next few sessions? In my view, the bullish case for IREN is stronger than ever. At $33, the stock has already delivered life-changing returns for those who bought in a year ago, but that doesn't mean the opportunity is gone. If AI revenue scales the way management says it will, if Bitcoin mining remains profitable at current capacity, and if institutions continue to build positions, then $33 could still be just the start. The stock may consolidate around this level for a bit, but every piece of news coming out of the company adds to the evidence that this is a business in transformation, moving from a cyclical miner to a diversified AI and infrastructure leader. When I step back and think about why I'm paying such close attention, it comes back to Eric Jackson's style of investing. He looks for names that are misunderstood, where the market is still applying an old narrative to a company that has already changed. That's what happened with OpenDoor, where he challenged the conventional wisdom that iBuyers were doomed and argued that the data advantage gave OpenDoor a long-term edge. And that's what's happening with IREN, where the market is still trying to value it as a Bitcoin miner even as it builds one of the largest AI GPU clusters in North America. That mismatch between perception and reality is often where the biggest opportunities lie. To wrap up, today's move to $33 and change is not just another green candle on the chart. It's confirmation that the bullish thesis is gaining traction, that institutions are backing it, and that IREN is steadily building out the infrastructure that could make it one of the most important players in both Bitcoin mining and AI cloud services. With record profits, explosive revenue growth, leadership upgrades, and Nvidia partnership status, this is a company that has positioned itself for the future. The stock has momentum, the story has credibility, and the thesis has room to run. That's why I remain bullish, and that's why I'll continue to keep a close watch as the story unfolds over the next few weeks and months.